The importance of supply chain logistics to an infrastructure build-out. The need for an infrastructure build-out has already been established. The American Society of Civil Engineers estimate between now and 2025, there's a $1.44 trillion funding gap across all of our infrastructure industries. However, there's plenty of pension and private sector money that can fund these infrastructure projects, but there's no real deal flow. This is because the financing paradigm is prohibitive, the regulatory process is inefficient, and most importantly, build-out is a state and regional issue, not a federal issue. There are two keys to solving this problem. The first is taking a supply chain perspective. This means evaluating infrastructure projects based on how well they enhance the supply chain. This will allow private sector growth, which will create more jobs and spur economic growth. The second is taking a bottom-up approach to the issue. Most people talk about infrastructure as a national policy, but the reality is that 78% of all infrastructure projects are planned, permitted, and financed at the state and local level. To illustrate the importance of supply chains and a bottom-up approach to solving the nation's infrastructure challenges, it is useful to understand the relevancy of supply chains to the global economy, the U.S. economy, and finally, international trade and investment. Supply chains drive global economics. 54% of global trade is intermediary products. The global GDP can increase 6 times more from reducing supply chain barriers than if you removed all tariffs. Finally, 90% of manufacturing companies in the world report having some level of outsourcing. From a national level, because supply chains cross borders, they drive corporate investment both internationally and domestically. Bypassing these borders sheds light on how the regions in the U.S. interact. Here we can see that there are 7 sub-economies. These are tightly linked by infrastructure lines and supply chains. And as a result, their consumers, businesses, and governments within each of the states rely on the port, freight, and air infrastructure of the other states in the region. Finally, trade and investment decisions are now driven by supply chains. 45% of international experts say supply chains are a strategic asset to their company, and 44% of executives cite infrastructure as one of the top concerns when they're looking for a new market. If you look at the Dow Jones Industrial returns versus the returns of the supply chain top 25, you can see an 11.44% gap. This gap underscores the importance of supply chains to turning a profit. The bottom line is that companies now compete with worldwide sourcing, international value chains, global supply chains. Also, they can access the 80% of the purchasing power that lives outside of the United States. To reach new markets or customers, these businesses need a robust infrastructure that can support their supply chain needs. There is no better example of this than the port infrastructure in the United States. Currently, 85% of internationally traded goods into and out of the U.S. go through only 25 ports. But only 4% of these goods start or end in the local markets of the ports. This means that the remaining 96% of these goods either head inbound and are disseminated into the region as inputs for businesses or final goods for U.S. consumers. Or they head outbound as final U.S. exports or continue along the supply chain of a U.S. or foreign multinational firm. This relationship renders the U.S. supply chain and export competitiveness dependent on regional infrastructure. Governors and supply chain stakeholders are at the epicenter of this issue. They have a better understanding of the nation's infrastructure needs and how a project will affect America's economic competitiveness that creates jobs and brings growth. Think global, act local.